Well, hello there, Maverick Traders. It is US Payrolls time again. So again, the first Friday of the month, let's jump into it. Tomorrow morning, let's take a look at the estimates. Tomorrow morning, 8:30 a.m. Eastern time, we've got estimates of 218,000 jobs. Now look, that is in relation to last month's 12,000 jobs. That was a huge miss. Now, before we really jump into this, we got to understand what happened last month. Last month was October, and remember, we had two major hurricanes rip through Florida and the East Coast, the Carolinas. And when this number came out, the market was kind of surprised, like, wow, that's a huge miss in jobs. But when they looked into the number, they said, hey, you know what? This is mostly due to the hurricanes. Now, this 218,000 that's expected for tomorrow, that's higher than we've seen lately. We've been averaging like around 120 to 150,000 jobs. That's been the average lately. And now we got 218,000. If you didn't understand the story, you would say, wow, the economy is doing super good and creating all these jobs. No, this is most likely just picking up the jobs lost in the October jobs report. It's going to be messy. So whatever number comes out, understand that it's going to be messy at first, and it's going to take people a while to sort through it. Just like last month, this 12,000 number came out. It was taken as a big miss initially. Futures went down on the news, and then everyone got into the report and said, hey, you know what? This isn't the real number because of the hurricanes. I expect to see the same thing, only a little bit different. So again, 218,000 jobs, it might come in at 230,000 jobs, 240,000 jobs. We don't know. I expect, again, the very first move, I don't trust in this report. Just like last month, we got the first move and then people read the report and said, hey, you know what? This is what likely has happened. I think we're dealing with that on this one. So this one's a tricky one. And I don't really love this setup this time. I love the payroll report. I play it every single month. This month, I think you're very likely to get one move, either up or down, and then a retracement of that, and probably end up where it opened. And if that's my outlook, then there's not really a great trade. So I'm going to be focusing more on the Canadian job reports number. I think this is going to be a cleaner number. I think if the number comes out good, CAD's going to go up. If it comes out bad, CAD is going to go down. There's no messiness in this number, so I'm going to focus on the CAD here this week. So let's jump right into the CAD basket. And again, I want to look at this at a daily chart. So the CAD has had this nice little run from 83 all the way up to 86. So a nice 300 pip run, and we've got a pullback. Now on a daily chart, this pullback violated lots of levels. Like on a daily chart, this should have held. This last level at 85.40, it should have held. It did not. It plunged down to the next level of support, and it looks like it's holding around this level. Now, we did bounce off of this, but this bounce is tepid. That is a tepid bounce. I'm going to jump into a weekly chart. And on a weekly chart, you can see it's looking more like a pullback rather than a blown pattern like it does on the daily chart. On the daily chart, it's definitely some technical damage is done. Weekly charts, monthly charts give us a little bit better perspective of where we are. And just we're getting this really tepid bounce off of this pretty major support line here that goes all the way back to January of 2023. So we're looking back like 1.5 years. We are in this support level. Ultimately, take a look at this bounce here. It took 4 months to get going and then had a nice bounce up to 88. Who knows what's going to happen here, but we are getting this bounce off of this. So for me, I am looking more to CAD long than CAD short, but it doesn't look great on all time frames. On a daily chart, we are absolutely trading against the daily chart. On a 4-hour chart, it is looking more like a low base than a high base. So look, this is where on any news event, you have what's called a premise. I think X is going to happen. Now look, this is now, at this point, just an opinion. An opinion is worth nothing when it comes to trading. My opinion is not valid at all. At all. Now look, I could make you a great case. I could write an essay about it and try to convince you. But look, I could be wildly wrong on this. It could be a low base and it could be a beautiful short setup. And guess what? That could easily happen tomorrow. So I'm just going to build in some safeguards that say, hey, I'm going to take this trade only if the price action is proving that this is a trade to take. So for me, there is no trade until it breaks out above this last resistance line. Now look, this is the basket. This is 7 currencies equally weighted against the CAD. We'll take a look at some actual pairs here. But I'm not going to even look to take a long here until it breaks out into this area on the basket. Now look, we're going to jump into some other currencies. We want to know what to go long CAD against. Well, guess what? I'm going to pop into the yen. The yen is strong. I don't want to short yen. So I'm looking for something to short. I come over here to dollar. Dollar is hanging in this range, but it's definitely starting to come down a bit. But the dollar hasn't broken technically. So the dollar is sideways at the moment. Euro has been weak. It's having a nice little bounce here, but right here, right now, the momentum is to the upside. I'm looking for something that has momentum to the downside right now. Swiss franc has momentum to the upside. The pound, momentum to the upside. As you can see, everything's having a bounce that we've looked at. So then I come into things like the Aussie. Here is the weakness. Here is the weakness we're looking for. So the Aussie has had negative momentum to the downside. The Kiwi, also down, but not as steep as the Aussie. So when I take a look at what is the best short out here, the best short out here is Aussie. So this is going to be the trade. We're going to focus on the Aussie CAD pair. So here's our currency board. And as I said, I'm focusing on CAD on this one. The dollar is, to me, I really don't like this payrolls report for the dollar. I like the Canadian report better. As of right now, the things that are showing the most momentum to the upside are Euro and Swiss franc. So if I wanted to be short CAD, if my premise was that the CAD was going to drop, Euro CAD and CAD Swiss franc would be the pairings. I am looking to play CAD to the long side. But remember, I am not going to do anything until it moves higher, until it breaks through some certain resistances. And because I want to play long, then I'm going to be focusing on the Aussie on the short side. So before we jump into the actual trade setups, where some key points might be, remember, you get to decide how to play these news reports. Do you want to enter before the news comes out? That is the highest risk, highest reward. The reason that this is the highest risk, highest reward is because of slippage. Slippage is where you think you have a stop. Okay, I get into a trade. I'm going to have a stop. Your stop is at 183.10. And you end up getting stopped out at 183.50. How does that happen? The market was moving so fast, your order did not get a chance to get filled between the 2 points. That's the biggest risk of getting in before. You can also get in on the news, meaning, okay, I'm going to set up some orders that when the news comes out, then my orders get triggered. The risk of getting triggered is twofold. You have stoppage, meaning you put in an order and it doesn't get you in at the price you wanted. And then you also get what we call the whipsaw. Take a look at this big, ugly candle. This was on a news event. If you were long and had a stop, so let's say you went long and you put in a stop, guess what? You got stopped out. If you were short and you put in a stop, guess what? You got stopped out. These are stop killers. This whipsaw candle, if you're trying to play around the news event, you have to have very, very wide stops. On this one, I'm going to be doing a second stage entry. That means I'm going to wait for the initial movement. Then I'm going to be putting my order out there. So let's take a look at some potential areas for that movement on this pairing of the Aussie CAD. So on the Aussie CAD, we want to be short. And this looks good. This is a good looking chart here to take a short position. We had a low base. And look at that. That low base is like almost a month long. We got a month-long low base breaking. So the daily chart on this one looks really great. We come down here into things like the 4-hour chart, and we just broke through a support line, came down, and then we rallied back up, and we've just been hanging out in this area. So we haven't turned down yet. So the clear entry point on this one is going to be this 90. 90 is going to be the entry point. And I shouldn't say entry point, but this is the point where this pair has to get here before I even think about putting it in order to get in it. So tomorrow, if the news comes out and it goes up, guess what? We won't take it. If it goes sideways, we won't take it. If it drops down a little bit, then bounces up, we won't take it. When it gets down to 90, now all of a sudden we're saying, okay, we now got the confirmation that the CAD is going to weaken. Now we have to start looking for potential entry points. This is where we go back in time, we go back on charts and look at support and resistance areas and really kind of identify what are some key areas here that we want to look for. So we got this great little band of support right in this 90-20 area. So you can see the next level of support is going to be down here, the 89.50 area. That's giving us a decent profit window. It's not the greatest trade I've ever seen. But for me, I'm looking at this, again, 90 is going to be this point. Let me pull up the 4-hour chart. This point right here, I want it to go down below this point. That only gives us a 50 pip profit window. When we take a look at where is the next support, all the way down to 89.50. So what I'm going to need to do, that's not big enough for me to try to catch it down here. So let's say I wait for it to break 90. If I'm catching it down here, you can see that I don't have a great profit window. Just not really great. Because of that, the only play I can make is it breaks below that point and it rallies back up. I will be looking for a short off of a short-term rally here in the 90.10 to 90.40 area. And then I'll put my stop up here above the parabolic SAR at 90.90, and that would be the trade. Now understand, I'm building all this trade, I'm building it like 14 hours away from the report. Things are going to dramatically change. So understand, we could be higher. So let's say that overnight the Aussie ends up rallying and we're now up into the 90.90 area. All of a sudden, it makes it a totally different trade. If it's up at 90.90, now it's like, hey, if we break down below this last support at 90.60, I would love to get in it. And because I have a ton of room all the way down to 89.50. So depending on what happens, it looks like it wants to base. That's what it looks like it wants to do at this moment. It wants to base. So if it does base, the only play I've got with enough profit room is a spike down and a bounce up, and I'll try to short that bounce up. Again, in the 90.10 to 90.40, 90.50 area. But it needs to break this 90 first. Now, these are very tight restraints on this trade. The odds of exactly what I said I'm looking for happening are pretty low, which means I'm very likely not going to take this trade. If we get a improvement overnight in the price, I would love to get it up here to the 90.80 area. Then it turns around. All of a sudden, I'm game. I'm game anywhere in that same window. I don't have to wait for a bounce or anything. I'm ready to go in that window because now I've got enough room. I've got enough room all the way down to 89.50 for that profit target to make sense. So wrapping this up, I think the Canadian Employment Report is actually better than the US Payrolls Report. You're probably going to hear me say that once every 5 years. I can't even remember the last time I said that, but I do think it's going to be a better report because of those weird numbers from the hurricane. If you're looking for a weak CAD, again, I'm looking for a strong CAD. If you say, Rob, I'm going to look for a weak CAD, that's perfectly fine. Euro and Swiss franc pairs are going to be the best. They're showing the best relative strength at the moment. Again, we're quite a bit away from this report, so redo it in the morning. Make sure you're hunting in the right place. If you're looking for a strong CAD like I am, then Aussie and the Kiwi will be the best to pair that up against. All right. Thanks for joining me. Good luck, everyone, tomorrow. Goodbye.